Good morning and welcome. Thank you for joining us. This is Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Well, we'll begin the show with global oil market update as oil prices rose around 1% this morning after major producers showed they were cutting crude output in line with their commitments on restraints, supporting a market thrown out of kilter by weak demand during the coronavirus pandemic. Brent crude was up 51 cents at $56.86 a barrel, while U.S. oil gained 53 cents to $54.08 a barrel. Both contracts rose more than 2% in the previous session. OPEC crude production increased for a seventh month in January after the group and its allies agreed to ease supply curbs further, but the growth was smaller than expected. The Organization of the Petroleum Exporting Countries was pumping 25.75 million barrels per day in January, up 160,000 barrels per day from December. And Russian output increased in January, but in line with the agreement on reducing production, while in Kazakhstan, oil volume fell for the month. Both countries are members of the OPEC Plus grouping that banded together to help support prices with production cuts.
And the efforts to boost local gas production and supply in Nigeria have got some boost as ANO Gas Processing Company Limited signs a $260 million ANO Gas project financing with a consortium of 7 banks, comprising of indigenous and 2 international banks. Speaking at the official signing ceremony at the Transcorp Hilton, Abuja, the chairman and managing director of AGPC says the project will not only scale up gas supply in the country, but will also help to reduce emissions and create more job opportunities for the citizens. Do take a listen.
The chairman of ANO Gas Processing Company Limited, AGPC, other top executives of the company and principal partners are here for the official signing of the $260 million ANO Gas project financing. The chairman of AGPC believes that the project will significantly contribute to the realization of government's plans to make gas available for domestic usage.
We have promised the nation that 2020 was the year of gas, and that is why all efforts are being put in place to drive the utilization of gas in Nigeria.
After the speeches are made, pen is put on paper, and the agreement to finance the project is signed and sealed. This ceremony is a culmination of a 50-50 efforts by Seplat Petroleum Development Company and Nigerian Gas Company NGC to raise the needed funding to complete the 300 million scf ANO gas plant. The $260 million for the project is provided by a consortium of 7 banks comprising 5 Nigerian and 2 international banks. Some of the officials here highlight the economic benefits of these projects to the country.
A number of people are working at the site, so a lot of job has already been created. The federal government has said they want to make gas an enabler for economic development, and this fits well into it.
We want to be by far the most dominant privately, or we're listed in the business market, but a privately held company. But the critical thing is working with government. So it's a partnership. It's a partnership that we have in all of our assets with government delivering that gas transition.
With a $420 million equity already injected into the project by the NNPC and Seplat, all the critical partners in this project are optimistic that the project will be completed, and when fully operational, it will help boost electricity supply, support local employment, and provide cleaner energy for citizens.
And away from oil and gas issues, S&P Global has affirmed its AAA foreign currency issuer credit rating of the African Development Bank with a stable outlook. A statement by the lender on Monday says that the ratings agency stated that the bank would, over the next 2 years, effectively manage its capital while maintaining solid levels of high-quality liquidity assets and a robust funding profile. It adds that it assumes that extraordinary shareholder support to the bank will remain unchanged, and the bank's $115 billion capital increase approved by its shareholders in 2019 will enable AFDB continue expanding its reach in infrastructure financing and private sector lending.
And as a part of efforts to diversify funding sources for the government, Nigeria's Debt Management Office has opened the FGN Savings Bond for the year with a subscription rate of 1,000 naira per unit. A document released by the DMO on Monday shows that the 2-year bond with February the 10th, 2023 as due date would attract an interest rate of 4.21% per annum, while the 3-year paper, which has February the 10th, 2024 as a due date, will attract an interest rate of 5.21% per annum. The closing date for the savings bond is February the 5th, while the settlement will be made on February the 10th, 2021. The bond, which is listed on the Nigerian Stock Exchange, is targeted at retail investors and is backed by the federal government. It guaranteed quarterly interest payment and repayment at maturity.
Okay, the Central Bank of Nigeria had indicated its plans to release about 300,000 metric tons of maize into the Nigerian market. That's this month. And this is expected to crash the prices of maize in the Nigerian market and increase demand for the crop and ultimately enhance the gains of maize farmers. A maize shortage in Nigeria, no doubt, has knocked on effects on poultry farmers. However, how much of impact will the release of these 300,000 metric tons of maize have in the entire value chains? A feed miller and the managing director, Hybrid Feeds, Leye Alayande, joins us next.
And managing director, Hybrid Feeds, Leye Alayande, joins us now. Thank you for joining us, Mr. Alayande. Great to have you.
Good morning.
Good morning. Thank you for joining us. Yeah, so Nigeria is currently experiencing a shortage of maize. How does this impact you as a feed miller?
Thank you. The problem with maize started in the year 19. This is not unconnected to some of the factors that occurred in the year 2019. These are, one, demand and supply. The supply, there is a wide supply gap between the demand. In 2019, about 8 million tons of maize was produced. And this left a huge deficit of up to 4 million tons. From what we are demanding as feed millers. The recent flooding that occurred in some parts of the north, Niger and part of Zamfara, also led to the insufficient supply. Some of us have also heard about the S-men farmers clash in some part of Benue State, Zamfara. This also led to a shortfall in the supply of maize. Ingredient is maize and soya. Based on the state projection, Nigeria required 12 million tons of maize to produce for domestic consumption and for industrial, an average of 8 to 9 million tons. This deficit has hiked the price of maize. I would like to give you a quick example. In the year 2019, a ton of maize was sold for 85,000 naira. And today, January or February 1st, 2021, we are buying a ton of maize for 200,000. This price hike has made some of major feed millers in the country unviable in the sense that with this over 100 increase in price of maize, some of us are not enjoying the business, and this is necessitating us to ask for how to make up this deficit so that the price can come down.
Okay, now the central bank has promised to release about 300,000 metric tons of maize this month. Is this a cheering news for you? How will this impact you, Asa Miller?
Yeah, it is, but it is a mixed feeling with both cheering and a sad one, because 300,000 is just a flash in the pan. It's just a drop in the ocean. Basically, as mentioned, our consumption is over 7 million tons, and they are just giving us 300,000 tons. That is basically the total feed, the total maize consumption for the feed mills in just 1 month. It can only just be a flash in the pan, and that will not go help us in any way.
Okay, so Nigeria is the largest producer of maize in Africa, yet Nigeria depends on importation of maize to meet its needs. The volume of maize imported was about half of the annual maize of 400,000 metric tons. And this is despite the Anchor Borrowers Program and all the other interventions aimed at supporting farmers. Where then is the output from these?
Yes, thank you. The challenge, as mentioned earlier, there is a wide gap between supply of maize and demand. Nigeria is known to be the second producers of maize in Africa. But the truth of the matter is that for domestic consumption and for industrial consumption, the demand is so wide that what Nigeria is supplying cannot and has never met our demand. And this is the reason why sometimes we have this deficit. And as you know, in the law of economics, once the demand is higher than supply, the price will spike. And this is exactly what we are experiencing now.
Now, maize is on the list of products that won't have access to forests. However, I know that stakeholders like you had kicked against it and have continued to kick against it, considering, considering the scarcity of foreign exchange. Don't you think that perhaps continuous importation of this commodity will put pressure or more pressure on the FX market? Is there no way that farmers can actually improve their productivity in this? Particularly for you feed millers, how do you support farmers? Maybe backward integration to also help in more production of this commodity.
Thank you. We Nigerian feed millers are patriotic, and we believe in Nigeria. We believe in the maxim of our President Buhari that says we should produce what we eat and eat what we produce. But here we are, like the law maxim, nomad quad non habit. You can't give what you don't have. Let me put it on record and let me put it straight. We are not advocating for perpetual importation of maize. We are hoping by 2022 there will be a bet. Now there is shortfall, and there is need to mitigate this shortfall by importing to meet up with the shortfall. And once this shortfall are met, I tell you, we the feed millers will definitely stick to what Nigeria produces. And the only way this can be done is to meet up with our national requirements. And I can tell you, we believe in local products. We have believe that whatever Nigeria produces, we Nigeria feed millers, that is what we are going to be using. But for now, I said, between what Nigeria produced in 2020, about 8 million tons, our requirement is 4 million, 12 million tons. There is a deficit of 4 million, and it must be met somewhere. Let me give you an example. Aramco is a national feed producer in Saudi Arabia. Once they discover there is a shortfall of maize for the year, they import from South America to meet up with the shortfall. The poultry industry in the government has so tonnage of maize. And once the government knows that there isn't enough maize to meet up their demand, they also import to make up for the shortfall. This is what we are advocating for. I tell you, by the year 2022, 23 down the line, we believe in Nigerian products, and I can tell you this is what Nigerian makes, is what the formulas will be using. But for now, there is a crisis imminent, and the only way to import to mitigate this shutting down, the medium-scale farmer, the small-scale farmers are no longer viable. There is no way you can run a business with over, when you are losing 30% of your investment, that business is no longer viable, and this will drive a lot of people into unemployment. Let me also say here, the industry is employing over 20 million people. And allowing such industry to run into this crisis because of maize scarcity is not a good omen.
Okay, but the central bank plans to support the commodity exchange with 50 billion naira seed money. What would this mean for your sector?
That is a welcome development, and we are glad with that information and that step taken by the APS Bank. We are in full support of that arrangement, and once the commodity exchange commences, the industry that is under the umbrella of co-transition, we will also come in to support that. To have that, we'll be able to make all these grains available. Not only maize, we are talking of maize, we are talking of soya, we are talking of sorghum. Once this commodity exchange picks up, our association will gladly work with that association, with that exchange, so that it can succeed. And I believe that it will succeed with our support and farmer support.
All right, thank you very much, Mr. Loyende, for sharing your thoughts there. We appreciate your time.
Thank you.
Okay, when we come back after the break, we'll bring you the domestic commodities market update as Maize Ige, one of the research analysts with Financial Derivatives Company, joins us next.
And for commodities market update, Maize Ige joins us now. Thank you for joining us.
Thank you for having me.
Good morning.
Good morning.
Yeah.
Thank you for having me.
So we just had a conversation about the issue of maize, and now there's going to be a commodity exchange. How will this impact the commodities market?
So a commodity exchange is basically the most perfect and efficient market system.
Okay.
And then when you look at it, it's and when you, okay, what is a perfect market? What are the characteristics? It just basically means a market setting where you sell standardized products. There's a quality, minimum quality. You have many buyers, many sellers. You have free entry, free exit, and then it gives an opportunity to set reasonable prices, and there's a lot of transparency in the market. So it's common in other countries around the world. You have the Chicago Board of Trade in the US, you have the New York Mercantile Exchange, and even in India, you have the MCX in India. So bringing it to Nigeria, it's something that would actually be beneficial to us. It would be beneficial to us generally when you bring it to Nigeria to help our agricultural production, in the sense that farmers know that there's an avenue where they can sell their products. There are traders, there are buyers. You have big companies that have easy access to our produce. And then if you look at Nigeria in particular, you notice that a lot of our farmers are small-scale farmers, and they do not have the leverage to sell what they actually produce. So with this exchange, there's a platform where you have traders that can buy from them. You have warehouses where they can store their produce, and then it's like spot buying. You have the manufacturers that need the raw materials, they buy maybe 500 tons on the spot. The
Manufacture like Guinness,
yeah,
Nigerian
Guinness,
breweries,
yes.
Right.
and all
And
of
they
them.
bring it on the spot, and then they buy it on the spot. And with this, there's no wastage. The farmers keeping things in. They don't even have good storage facilities, to be honest. So that wastage is reduced. Like in Nigeria now, farmers, about 40% of what our farmers produce are wasted. And then, so when that is taken out, you have more supply of agricultural products. Then farmers are incentivized to even produce more. And then we'd actually see a drop in commodity prices generally. And this would feed into inflation. It will help our inflation because we have higher supply of produce. We have transparent pricing generally. So it would even help individuals in terms of commodity prices.
Okay. Okay, another burning issue there. Of course, yesterday we saw FBN Quest PMI come out and not really looking very good, crashing 19% to 44.5%. That's the lowest, in many months. Now, of course, we've seen some kind of optimism there from the government that Nigeria will exit recession this year. So, but with the PMI numbers that we are seeing now, even though we have not seen that of the central bank, what we're seeing now, are we likely to witness this positive growth this year?
So, most likely not. We're probably not going to see, because the PMI is a leading indicator, right? So when we look at it, generally in the start of the year, January, we usually see a drop in the PMI because there's been a festive period, economic activities were reduced, and then so all that will feed into what we see in January, and then as economic activities pick up, we'll see a pickup in the PMI. And so that's also what has happened. But now the number you have called is about 44.5, which is lower than 50, meaning we're in the contraction region right now. So that is showing that the GDP growth is going to be negative, really. And then looking at FBN's PMI, the reasons for this, we have this high scarcity and high cost of raw materials. You have a delay in resumption of economic activities, and all of this.
And the FX challenges.
And the FX charges, that also feeds into the scarcity. One of the reasons why we also have, there's this forex shortage, and manufacturers are actually a major part of people that have been affected by this. And this is affecting their own business. So there's that. So that's the general thing that usually happens. Now, when we now look at COVID-19, it's added its own impact in this, which has led to the reduction, the further reduction from what we would have seen in previous years. And so all of these, with all of these indications, we do not think that we would see a growth in this first quarter. And now second quarter, we do not know. But for now, the signals are not quite positive. So we most likely wouldn't see a positive growth in the Q1.
Anyway, looking at the oil markets now, OPEC has maintained an extraordinary level of output discipline, which has pushed the price of Brent above $55 per barrel. Do you think that this is actually sustainable?
Well, to an extent, probably not. The reason for this, you look at OPEC, Saudi Arabia being the market leader, or big brother in this case, if we call it, Saudi reduced their output this year, and they've also hinted that they would actually reduce further by about 1 million barrels in February and March, and then so this would help reduce production output and then increase prices, especially when you consider that other oil-producing countries most of them are not exactly psyched to reduce their output because of their own respective economic challenges as a result of COVID-19 and everything. So Saudi Arabia rather, is taking the lead in trying to maintain a balance. And then you also have Russia and Kazakhstan that have also been given a license to increase their oil production. So they're trying to create a balance in that regard. But then they're also concerned about the resurgence of the COVID-19. You've seen the new variants, and there are also concerns as to the rollout of the vaccine, accessibility, especially in other countries. Like, for instance, Nigeria is a major oil producer. We know that accessibility to the vaccine would be a bit of an issue for us. So that's also a concern generally. And then how it's going to impact demand, global demand for oil. It may actually lead to a reduction in demand, which would impact prices. So that's a major challenge that has led to an uncertainty, which we cannot particularly say that the prices this will be sustainable, because that's a major uncertainty that's going to affect the price of crude oil going
So
forward.
what will this do to the Nigerian budget fiscal deficit?
So for Nigeria, apart from the price, we know our budget currently, we have petroleum price pegged at about $40 per barrel for our budget. And now petroleum is trading at over about $55 per barrel. So yes, you could say, oh, it should be beneficial to us, but Nigeria has a particular challenge. Our production has actually dropped by, I think, about 50,000 barrels per day, which is a particular problem peculiar to us. You have, I think there's an issue at Kwa Ibo facility. Yeah. So we have to, that is a major challenge. So even if the price increases, if that is not sorted, we might not benefit so much from it. But yeah, if you say with higher price petroleum crude oil prices, Nigeria would be able to fund her budget better. But then there are also other challenges that would go to the common man as a result of
like
an increase in
PMS.
increase in the price of PMS, and how it would also flow to
the commodity prices. Yeah.
Okay, so the price of rice usually falls in January as consumers use their disposable income to meet their school fees, bills, and other necessities. Because of these supply shortages, how would this impact the import restrictions?
Well, rice has actually declined a bit, right, by about 9%.
Yeah.
But then, when we look at it, there's still a restriction on the price of rice. There's still a restriction on the price of rice. So even with there's a limit to how low the prices can drop. And then if there's smuggling, we still know that there's smuggling, right? But then there's tighter control at the borders, so the level of smuggling has reduced. It's not as rampant as it used to be. So there's a limit to how much supply that's in the market. And then there's also been challenges surrounding rice production generally in the past year that have affected our harvest, our output. So even with the reduction in demand and all of that, it's still the limit to the decline in rice prices is a bit capped. It can't go a bit further than it currently is.
Okay. And then looking at the global price of palm oil, that has fallen as well. And of course, the opposite is the case here in Nigeria. So we've seen price increase by 5% to 20,000 naira. So why is the Nigerian price moving in the opposite direction of the global trend?
So the decline in palm oil prices happened as a result of the pandemic. But as at Q3, palm oil prices have actually started picking up. And then we know that crude palm oil is also an important raw material for palm oil production in Nigeria. So with the increase in price of crude oil palm oil in recent times, it's also impacted our price of palm oil in Nigeria. And there's also a limit to the supply. The border has been opened, right? But still, there's a limit to how much palm oil is being brought into the country. So there's also a shortage of supply. And currently in Nigeria, this is the planting season of palm oil. It's not the harvest season. So generally also, there's a shortage of supply. And also when we go back to logistics, palm oil is majorly produced in the east. And then we know that in Nigeria currently there's insecurity on the roads. And
transportation issues.
All of this is put into the logistics cost, and it goes back to the consumer in terms of higher prices. So all of these have affected the prices of palm oil in particular in Nigeria.
Okay, so we've seen Okomu and Presco, of course, they are reporting healthy profits and their stock prices have soared this quarter. Could it be, because of this contrarian movement that you have, talked about, that we're seeing that trend in some of these stocks?
Palm oil, well, they are dealing with palm oil. Palm oil is a very, it's in high demand. So it's a commodity that's used by everyone. Even now, when you look at the COVID-19 pandemic, you're advised to always wash your hands. Palm oil is used to make soaps. So it's in high demand. It's always in high demand. So they are dealing with a commodity that the demand is always high. So even when there's a shortage of supply, they have high demand. And then there was the border closure that was just reversed quite recently. So they have benefited from that border closure a lot. Then the demand, constant demand for palm oil has been beneficial to them. And also, so for instance, Presco, for instance, has had some very interesting strategies, expansionary strategies, backward integration that has been beneficial to them over, even especially during this COVID-19 pandemic. So all of these have helped to improve their performance, their sales. But also, both companies also have particular issues as related to their costs. They have some cost pressures, high admin costs, that is also affecting their profit after tax, and also that is also a problem there. But that is an internal problem. It's not an it doesn't affect their sale per se. But generally, because they are dealing with a commodity that is in high demand, they're definitely doing well.
Well, we know that this is a pretty new week, and looking at this trend in the domestic commodity space and, of course, the global commodity space, both oil and the agri-commodity, what is the outlook for the rest of the week?
For the rest of the week, we have planting season going to kick off very soon. So we expect to see some commodities would rise. Then if we look at some global commodities like wheat, we expect to see prices increase because Russia still has some export levies on wheat. And then we have corn. There's a higher demand for corn, so we expect prices to go up because I think China needs it for ethanol production. We also have sugar. We still have, I think, challenges with the weather conditions in Brazil.
Talking about corn, so if we have the potential of producing this maize and then China needs it for ethanol, why can't we produce it?
Yeah.
So we can actually produce it, and we produce it. But the problem still goes back to our production challenges. Like when I mentioned earlier when we spoke about the commodity exchange, that we have a lot in Nigeria, a lot of our farmers are small-scale farmers. There's a limit to how much they can produce. And then we do not have a lot of the value chain, should I say, agricultural value chain in Nigeria is not so developed. And this would actually affect them. So and then when you say they're small-scale farmers, they use we say they're subsistent farmers. There's a level of there's a limit to how much they can actually produce. So and then they have fertilizers is one of the ban lists. For you to grow anything, you need fertilizers. Then quality is also a factor. You need quality. You how they say computer language, garbage in, garbage out. You need to be able to put quality seedlings into the ground to get quality produce. So all of these, Nigeria is not just peculiar to corn. I say to most agricultural commodities, it's the challenge. Agricultural challenges in Nigeria, lack of credit. They say they have credit facilities, but the interest rates are not. Yeah. The interest rate is too high for a small-scale farmer. You have infrastructural challenges and so many things really affecting agricultural production in Nigeria.
All right, thank you very much, Maiwa, for your time. So we'll look forward to seeing you on Thursday, I guess.
Yes.
Okay, we'll take a moment and we'll be back in a moment. All right, let's look at the markets. Eddie, yesterday, the equities market, of course, well, you will say it started on the bearish note. But was that really a bearish note?
Well, not really. It's still a bullish market, but I'm sure there were some investors that just needed to cash out from the gains they made last week. So that's what we saw in the market yesterday. But I'll be talking to a stockbroker, Rotimi Fakaijo, for more on the markets. Good morning, Mr. Fakaijo. Thank you for joining us on the program.
Good morning, Gideon.
I'd just like us to talk about some earnings now. Yesterday, we saw earnings from corn oil, but there was really no price movement, on that stock. What stood out for you in their numbers?
As for me, for corn oil, first point is usually they delay in the release of their results. So for them having released at this time, I think it's a plus for them. Then secondly, with the harsh environment in the oil and gas sector in the year 2020, they are still able to keep their numbers within the same band. We're not seeing too much downward trend. We saw a depletion in their top line, and we saw a slight depletion in their bottom line. But all in all, I think the performance should have been better. And for last year, they paid a dividend of 2 naira. Though they have not announced per share that they have, they may be able to do as much as that 2 naira since there's no regulation putting them in place not to be able to do as much dividend as they like. So, and I think the result is not bad at all. It's something to actually be heartwarming, considering what that sector has had. Because you know full well that during the lockdown, movements were restrained, and definitely the consumption of their products would have been very much less. For them to have turned out this kind of figure, I believe they've done quite well.
All right, Mr. Fakayijo, thank you for your input on the program. Rotimi Fakayijo is a stockbroker. And I will just turn to the market now. There was some profit taking in the market, and that was driven by Nestle, Access Bank, and Flour Mills. All share index was down 0.13% at 42,357.90 points. Now, the month-to-date loss, we saw a month-to-date loss of about 0.1%, while the year-to-date returns currently stands at 5.2%. The equity cap was still in the 22 trillion naira level at 22.157 trillion naira. We saw about 586.80 million units worth 6.02 billion naira traded in 7,611 deals. Sectoral performance was mostly negative, but mostly positive, I beg your pardon. We saw declines from the banking sector, which was due to the losses on Access Bank. Consumer goods was down, of course, that was due to Nestle and Flour Mills. Industrial goods was unchanged. Insurance was up 0.37%, while oil and gas came in at 0.22%. The bond market continued its bearish run yesterday. We saw yields increase in that segment of the market, especially at the long and the short end, while the mid segment of that market was flat. There were 41 deals worth 58.61 billion naira. The Nigerian Treasury bills market was also bearish yesterday. We saw yields increase in that segment. There were 6 deals worth 620.53 million naira. There were no deals on the CBN special bills market, while the OMO market was also bearish yesterday. We had 19 deals worth 20.26 billion naira. But with the market now, hopefully the bond market continues its bearish run. Investors, that's good news for investors. At least the yields in that segment of the market have been on the rise lately. So that's some good news for investors, Chimi.
All right, we'll see how long that will last and continue to monitor the equities market, because that seems to be where maybe my interest is. I don't know. Okay, we'll take another break, and then when we come back, we check with Juliana in London. Okay, let's see what's happening in London, and Juliana joins us now. Good morning, Juliana. So, what are you hearing about this collapse of London Capital and Finance? The head of an independent inquiry into the matter says the Treasury needs to consider whether the governor of the Bank of England should face consequences over his mishandling of investment scandal there.
Yeah, good morning, Chimi. This is a pretty serious story, and it involves £236 million that was lost by about 10,000 individuals. These were mainly older people who were heavily marketed. They were told to invest in what was been described as these mini bonds, and mostly elderly people put £20,000 each in the pot, and it collapsed. And now the Treasury Select Committee, which is a group of cross-party MPs, they are investigating the role that the Financial Conduct Authority had in not making sure that these customers were well looked after. Now, at the time, the head of the Financial Conduct Authority was Andrew Bailey. He is now the Bank of England governor. And yesterday, Dame Elizabeth Gloucester, a former High Court judge, asked the group of MPs to consider whether or not they should pursue some sort of case against 3 individuals at the FCA at the time, one of them being Andrew Bailey. It is a serious issue. So far, we know that £50 million has been paid back to about 11 7,000 individuals, but there are still so many people who are out of pocket. This has also been taken to the serious fraud case, and there have been 5 arrests made. So it's pretty serious. We are expecting to hear from Andrew Bailey. So far, the Bank of England failed to comment on the proceedings yesterday, but it's a long-running story and a serious issue here in the UK.
And we'll continue to keep a track on it and perhaps get an update much later in the day. Okay, George Osborne, the former Chancellor who orchestrated the austerity drive after the financial crisis, is dropping his portfolio career to become a full-time banker. Is this a topic of discussion amongst market players this morning?
Yes and no. It's definitely one for the headlines. George Osborne, Boy George, as the media call him, he was the Chancellor of the Exchequer under former Prime Minister David Cameron's Conservative cabinet for several years. He's well known as being the editor, and then he was promoted to editor-in-chief of the Evening Standard, which is a popular London newspaper given out free for people who travel on the tube. He has announced that he is stepping down in March, and he is going to become a full-time mergers and acquisitions financial consultant at Roby Warshaw. Now, this is not your average bank, so you won't be seeing George Osborne giving you money on the counter. It's described as an elitist boutique investment firm. He's going to have a very, very senior role there. There are no indications of what his salary is, but it's definitely going to be in the high 6 figures. And, you know, they're going to be very lucky to have them. They have a very high quality portfolio of big companies, including Vodafone, BP, Centrica. They also oversaw the London Stock Exchange's mergers and acquisitions, as well as when Reuters wanted to take over Refinitiv. So, you know, a great day for George Osborne. He's certainly qualified for the role. When he got the position at the London Standard, the Evening Standard, a lot of people were questioning whether he could be an editor. So with this job, we wish him all the best.
Interesting. Okay, what companies are on the radar today?
It's a pretty slow corporate day today, but the biggest corporate story of the day is BP. They've just released this morning their 2020 earnings, showing that they had a loss of $5.7 billion. No surprises, because, of course, the pandemic completely slowed down the demand for oil. Their shares were down 3% as soon as they made that announcement this morning, as well as the loss of those earnings. They also announced, Bernard Looney, the chief executive, that they are going ahead. They're accelerating this drive to become a clean, green energy giant, and they are cutting 10,000 positions. In Q4 last year, I believe about 2,000 jobs went. The remaining jobs will go before the end of the year. So, yes, a big story for them. Their shares down 3% early trading. Chimay.
Okay, I'll talk to you later for update on the shares of BP and perhaps other market updates. Okay, let's take a peep into the crypto market, and I have Ladi there. Hi, Ladi.
Hi, Chimi. Well, the crypto market is still not looking bad. Right now, the market cap still stands at $1 trillion. The 24-hour volume, that's for the total cryptocurrency markets, stands at $157.23 billion. And BTC dominance, that's Bitcoin's dominance in the markets, stands at 62.13% as at 8 a.m. this morning. So price of Bitcoin, $34,155 per Bitcoin, up 1.63%. So the thing about Bitcoin is, as Bitcoin stays within this 30K range, you know, the altcoins have a chance to play and surge. So the bulls are defending this 30K range with their life at this point, because last Friday, Elon Musk's tweet boosted the price to about $38,000 just for putting BTC, Bitcoin, on his Twitter bio. That's why we saw that surge. The 24-hour volume is at $61.141 billion. Let's talk to Gaius Chibweze, crypto trader. Hello, Gaius.
Yeah, thank you so much, Mr. Williams, for having me on again today.
Gaius, I'm sure you've been making profit out there.
Yeah, I actually made I like how you started. I actually made a couple of profits
Okay.
yesterday on altcoins, and Bitcoin
Uh-huh.
seems to be kicking this morning. I see
Okay.
Bitcoin heading to $37,000. It's currently
Okay.
at 35.
So, you know, we've been talking about this alt season. Is it here?
Yes.
Is alt season
I
here?
think if Bitcoin can just be stable for 2 weeks, then
Uh-huh.
the alt season is here. But right now,
Yeah.
Bitcoin seems not to be wanting to stay one place. So
Okay.
I see Bitcoin still moving up. And you know what happens? Once Bitcoin
Uh-huh.
starts to pump, everybody sells off their altcoins
Altcoins,
to
yeah.
jump the Bitcoin pump.
So tell me, what are the risks in trading Bitcoin at this time?
Well, like I have always said, Bitcoin
Yeah.
is currently at something I can still call an all-time high. You know, it went
Yes.
to $43,000. A lot of
Mm-hmm.
persons bought at that, and right now, everybody that had bought at $42,000 is in some sort of loss if they sell now. So people should actually think long-term. There is risk because it's very, very volatile.
Yeah.
We are seeing it at $35,000 now. We can wake up later in the day to see it at $30,000. So people should think long term, understand the risk involved, and I think that is all the risk that there is.
At this point,
Thinking long
because you
term
don't
will
want to
help
buy the
reduce
top,
that.
yeah?
Yeah.
Okay, so quick
Buying at
one. Quick one.
buying at the top can actually give some people heart attack.
Uh-huh,
When
exactly. Okay, quick one, Chibueze. What are you holding right now?
I'm currently holding Tatcoin, Bitcoin, BNB. I bought BNB in 2017 for 10 cents. I'm still holding it. I think BNB is currently doing
Incredible.
very,
All right.
good
All right,
at
Chibueze. Thank
$50.
you so much. Thank you so much, Chibueze.
Thank you so much for
Thank
having
you.
me.
So good to talk to you. All right, Chimi, you heard it there.
Yeah, while Elon Musk is busy pumping Bitcoin.
Exactly.
Now, you talked about Funfair
Yeah,
and
Funfair
Ethereum coming up, even though Chibueze didn't, is not holding on those.
77% this morning. Incredible rise.
Well, it's still not a market I will consider anyway. All right, Adi, thank you.
Thank you.
That's it on the program, and thank you for watching. I'm Chimeze Obi Iwago.